Welcome to REI Super's March 2025 Quarterly Investment Update. I'm Angelos Siapakis, the Group Executive of Investment Strategy and Operations at REI Super. In summary, over the March quarter, the Reserve Bank of Australia reduced the cash rate by 25 basis points at its Feb meeting. More recently, the RBA cut interest rates by a further 25 basis points at its May meeting. The Australian dollar was mixed across the quarter with a slight gain against the US dollar whilst losing ground against the euro. Share markets globally declined from the uncertainty created by the Trump tariff announcements. Bonds, on the other hand, posted modest positive returns as most global central banks continued easing monetary policy. No doubt, the Trump administration's tariff plans will continue to dominate market sentiment and headlines into quarter two, as the world watches the US versus China trade war unfold. It should be noted that this is rapidly changing following a recent US-China meeting. Australian shares started 2025 in the negative, with the market falling 3.9%. Telecommunication services was the best performing sector, returning 5.8%. Whilst the largest negative returns over the quarter were seen in information technology, which fell 18.2%. Global shares fell 1.9% in Australian dollar terms, as the Australian dollar declined against most major currencies. In developed markets, energy was the best performing sector, up 9.2%, with information technology posting the largest decline of 12.3%. On the whole, bond markets globally were mostly positive for investors, with domestic bonds delivering a 1.3% return, while global bonds posted a 1.1% return for the quarter. Domestic listed property experienced a negative return for the quarter of 6.6% compared to global property, which was slightly positive, returning 0.7%. Listed global infrastructure had a positive return of 3.4% for the quarter. To find out more about investment markets in the March quarter, please read our March quarter investment summary at the link on your screen. Now, turning to our fund. Our balanced or MySuper investment option is REI Super's default investment strategy, where most of our members are invested. Despite posting a small negative return for the quarter, consistent with financial markets, our balanced option posted a return of 5.44% for the financial year to date, whilst the equivalent balanced option for our pension members posted a return of 6.16%. For the same period, our growth investment options returned 6.01% for super and 6.78% for pensions. The key contributors to these returns were global shares returning 12.3%, unlisted infrastructure posting a return of 9.8%, and Australian shares which returned 4.5%. To find out how all of our investment options performed for the financial year to date, please visit the link on your screen. Recent market volatility was largely driven by the imposition of a range of tariffs by the US administration on China, Canada and Mexico in February and March this year. This unsettled share markets globally, adversely impacting returns during the March quarter. This continued into April following the Trump Liberation Day reciprocal tariffs, creating further uncertainty and volatility across global markets. With recent volatility in the investment markets caused by these tariffs, we want to reassure members that your super is being managed with the utmost care and expertise. Our 50 years experience has shown that after periods of volatility, markets typically recover any losses. This is a key reason to stay invested and maintain your long-term strategy. The following chart illustrates the market's tendency to bounce back following a sudden downturn. For example, the COVID-19 pandemic saw the Australian share market fall sharply in early 2020, eventually recovering early the following year. Despite the increased market volatility more recently, Australian shares have bounced back over April, largely recovering the losses incurred from the tariffs. During uncertain times, it's important to remember that the core fundamentals of superannuation remain the same, that of long-term real growth. And this reinforces the need to focus on your long-term investment strategy and objectives. Over the 10 years to 31 March 2025, our balanced option has returned 6.07% per annum, whilst the growth investment option has returned 7.71%. We strongly urge all members to seek advice before making any changes to their investment options. Often, the best thing to do is to review your long-term strategy, taking into account your own personal circumstances and your goals. As an REI Super member, you have access to financial advice to discuss your superannuation benefits within your REI Super account at no extra cost. This includes advice on which of our investment options may be right for you. If you require advice beyond your super account with us, you can speak with one of our advisors who can provide you with comprehensive advice based on your circumstances at an additional cost. If we can help in any way, please call our friendly team on 1300 13 44 33. Thank you.
This is general advice. Always read the PDS and TMD at reisuper.com.au before making any decisions. Future investment performance can vary from past performance, and you should not base your decision to invest in REI Super simply on past performance. Past earning rates are not an indicator of future earning rates. The investment returns of REI Super are not guaranteed, and the value of the investment may rise or fall.